Imagine you buy a business today, tomorrow morning you open the door and money starts coming in. Sounds perfect, right? But here's the problem. You don't know why the money is coming in. You don't know who actually runs the business. And you don't know what will break the moment you touch anything. Today I want to talk about why starting a business with money can feel safe and why that feeling is often an illusion. I'm Ravi Gabis and welcome back to the Gabis Show, where we unlock the secrets of real wealth in the United States every single day. Today we continue talking about business. And the question for today is simple. Does it really make sense to start a business with investment capital? On the surface, we see examples where this approach seems to work. If we look at companies like Alibaba, we know that over the years, they have acquired dozens of startups, maybe tens, maybe more. But here's the part most people forget. Out of all those acquisitions, only a very small number actually worked out. 2, maybe 3, the rest lost money. But Alibaba can't afford that. For a large corporation, this is a calculated strategy. They understand that most experiments will fail. They are buying options, not guarantees. Small companies can experiment, they are flexible, they can take risks. So Alibaba buys these companies, integrates the few successful ones into its system, and the failures simply disappear inside the huge balance sheet. In that case, investment can make sense, but this logic only works when you can afford failure. The same idea applies to Amazon. At the very beginning, Amazon deliberately followed a strategy of losing money. Jeff Bezos openly convinced investors to accept losses for years in exchange for growth, market share, and scale. Amazon wasn't trying to be profitable early. It was trying to dominate. And that strategy worked. But let's be very honest. Amazon could do this because it had patient investors, it had access to capital, it had long-term vision, and it could survive years without profit. Most entrepreneurs do not have these conditions. Trying to copy Amazon's strategy without Amazon's resources is one of the fastest ways to destroy a business. Now let's talk about buying a ready-made business. Take a grocery store as an example. A mid-sized grocery store can carry thousands, sometimes tens of thousands of items. Food, household, goods, everyday products. If you start from scratch, you need time to figure everything out. Suppliers, inventory, ordering systems, cash registers, employees, logistics, that takes time. But if you buy a working store, the next day the business is already running. The systems are in place, customers are coming in, money starts flowing. In that sense, investment saves time. You don't need to search for a location. You don't need to hire a team from zero. You don't need to build supplier chains from scratch. But now let's talk about the danger. Statistically, about 9 out of 10 businesses close within the first year. That means there is a very high chance you will lose your money. And not everyone can afford that. If we're talking about Alibaba or Amazon, we're talking about companies with massive capital. But if you want to open a restaurant, for example, you might need $100,000 or $200,000, sometimes even $500,000. For most people, losing that money would be catastrophic. There is another hidden problem. When you buy a ready-made business, you often don't understand how it actually works. You don't know which person is critical. You don't know which process keeps everything together. You fire one employee and suddenly the whole system stops. But when you start from scratch, in the beginning you do everything yourself. You sell, you talk to suppliers, you deal with customers, you manage systems, you solve problems. And over time, you understand that what truly matters in your business. You learn which parts of the business can be delegated and which parts must stay under your control. That understanding is priceless. So, yes, you can start a business with investment, but you must be ready for it. It usually makes sense only at a certain level of experience or inside a much larger system, or when you can afford failure. When we look at most successful companies, we see the same pattern again and again. In the beginning, they start from scratch. That's my story for today. Tomorrow, we will continue and talk step by step about how business should actually be built the right way. Bye.